The SPDR Portfolio Developed World ex-US ETF, SPDW, is an exchange-traded fund, ETF, managed by State Street Global Advisors. It is designed to track the performance of the S&P Developed ex-US BMI Index, which includes large and mid-cap stocks from developed countries outside the United States. The ETF is listed on the NYSE Arca exchange and is one of the largest and most liquid ETFs in the world, with over $2 billion in assets under management as of 2021. One of the main advantages of investing in an ETF like SPDW is its diversification. By holding a basket of stocks from multiple countries and industries, it can help reduce the risk of investing in any one individual stock or market. This can be especially appealing to investors who are looking to invest in international markets but are concerned about the added risks of currency exchange and political instability. Another advantage of SPDW is its low cost. Like all ETFs, SPDW is a passive investment vehicle, meaning it is not actively managed by a portfolio manager. Instead, it simply tracks the performance of its underlying index, which can help keep costs low for investors. The expense ratio for SPDW is just 0.09%, which is significantly lower than the average expense ratio for actively managed mutual funds. Despite its diversification and low cost, there are also some potential drawbacks to consider before investing in SPDW. One potential risk is currency risk, as the ETF holds stocks in multiple foreign currencies. This means that the value of the ETF could be affected by fluctuations in exchange rates. Additionally, the ETF's performance is largely dependent on the performance of the underlying index, which means that it may not outperform other international stock markets or individual stocks. In summary, the SPDR Portfolio Developed World ex-US ETF, SPDW, is a low-cost, diversified ETF that provides exposure to large and mid-cap stocks from developed countries outside the United States. It can be a useful investment for those looking to diversify their portfolio and gain exposure to international markets, but it is important to consider the potential risks, including currency risk and the potential for underperformance relative to other investments.